Ever wondered what makes the stock market tick? Why do some stocks soar while others plummet, and how can you predict these movements? Today, we delve into the complex world of the stock market, breaking down its intricate mechanisms in a way that anyone can understand. Picture the stock market as a vast, bustling marketplace. Instead of fruits, vegetables, or handcrafted goods, this market trades in shares of public companies. These shares represent a slice of ownership in a company. When you buy a share, you essentially become a part owner of that company, hoping that the company will thrive and your investment will grow. But how do we determine the price of a share? It's a bit like a seesaw. On one side, we have supply, the number of shares a company chooses to release or float. On the other side, we have demand, driven by investors who want to buy these shares. The interplay between supply and demand determines the price of a share at any given moment. Now, why would the price of a share change? Various factors come into play here. Corporate earnings reports, economic indicators, geopolitical events, even rumors can cause investors to buy or sell shares, affecting demand and thus the price. Consider the concept of bulls and bears. Ever heard of them? In stock market lingo, a bull market refers to a market on the rise, while a bear market denotes a market in decline. These terms come from the way these animals attack their opponents. A bull thrusts its horns up into the air, while a bear swipes its paws downward. These actions are metaphors for the movement of a market. If the trend is up, it's a bull market. If it's down, it's a bear market. But here's a key point to remember. The stock market is not a get-rich-quick scheme. It requires patience, research, and a healthy tolerance for risk. Think of investing as planting a tree. You can't just plant a seed and expect it to become a towering oak overnight. It takes time, care, and nurturing. And to recap, the stock market is a complex system where shares of publicly traded companies are bought and sold. The price of a share is determined by the interplay of supply and demand. Various factors can influence this demand, causing the price to fluctuate. And remember, investing in the stock market isn't a sprint, it's a marathon. So the next time you look at the stock market, you'll see more than just numbers. You'll understand the forces at work beneath those figures. You'll see the ebb and flow of supply and demand, the impact of world events, and the long game of investing. And who knows, you might even see an opportunity to grow your wealth. Remember, the stock market isn't just for finance gurus and Wall Street whizzes. With a bit of knowledge and understanding, anyone can dip their toes into the world of stocks and shares. Navigate wisely, and you might just find your fortune. Until then, keep learning, keep exploring, and keep asking questions. The world of finance waits for no one, but it rewards those who dare to understand it.